Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on our podcast, we have Gabriella Mihajlovic. I hope I kind of butchered it, but I think I got it right. Gabriella is from Rate Shop. Rate Shop is here to help people like you navigate life's big moments, from divorce to caring for aging parents. Rate Shop wants you to enjoy easy, helpful, and fun mortgage experiences delivered with great service, specialized financial products with competitive rates. Now, Gabriella, welcome to the podcast.
Hi.
Before I move forward, I want you to let the listeners know how you pronounce your last name, just so that they get it. I know I tried, but I made a bit of a mess there.
No, well, you did well. It's actually Mikhailovich, Gabriela Mihajlovic.
Nice, awesome. So, just to kick things off, I kind of went on your LinkedIn, did a little bit of stalking. I've seen that like you spent your kind of career in the mortgages side, in the financial side, in just that banking side. So you've got just a rich career to draw upon. Can you give our listeners just for a start, why did you kind of an understanding of why you got into the financial industry? Was it something that you knew from the beginning? Was it something that you kind of came into and then thought, like, you know what, I'm really good at this. I got to keep going. Like, what was it that got you into the financial industry?
It's my background, my schooling from back home. It's actually in economics and finance. So that kind of got me started, and it's also the numbers. I like numbers, and I like helping people. So this is marrying the two together. What better way to help somebody than to walk them through the numbers and help them get a house and help them, with their finances. It comes kind of easy to me, but you know, to a lot of people, okay, financing is something that they're not too familiar with or keen to look in the numbers and stuff like that. So yeah, that's how I ended up in banking.
So you started at one of the big banks in Canada, and then you moved into private, not private, well, mortgage brokering. So what got you to kind of switch over? Why go from a huge bank, which you could have, there's at least perceived financial security, and you've spent a decent amount of time there. You've got very good experience there, and then you moved into mortgage brokering. What kind of was that change? What made you kind of move over?
It's ability. When you're a mortgage broker, you have ability to access more than one lender. When you're with the bank, you're actually with one lender and one lender only. So you're limited in a scope of products and scope of freedoms, for the lack of a better word. But the reason why I moved into mortgage brokering is the freedom. Nothing beats being self-employed. Like, yeah, it's nice to have a paycheck, but Hey, listen, if you can bike, okay, and be on a call, okay, what's better than that?
I think you're probably one of the first people I've heard that come from. Most people would be like, you know what, I like the paycheck, but if you enjoy mortgage brokering and working for yourself, that's awesome too. Because with mortgage brokering, it's you're more in tune with the volatility of the market, safe to say, right? So with mortgage brokering, give us a little taste of like what it's like working with you. So if I want to kind of get a mortgage, my first mortgage, whether I'm a first-time home buyer, whether I'm a repeat home buyer, refinancing for other reasons, what is it like working with you? Am I just going to shoot you an email? Are you do I give you a call? Are you completely digital? Can I see you? Like what's the entire process in terms of working with you for a mortgage?
It's a mix. So whatever works for you to contact me, that's the way I will actually accommodate the client. I will meet with the client if that is easier.
Mm-hmm.
But email works, phone works, Zoom works. Like any media, okay, works for me. And as in terms of what is it like working with me? Well, it's a little bit different than what you would think. Okay, as a mortgage brokering is, because I would like to get to know the client better and figure out what their goals are before we actually discuss the rates and everything else.
Mm.
Because you're not, nobody's just a number, and that's another thing that bank. The reason for switching from a bank into mortgage brokering, you're not a number, you're not just another call that I have to make. Okay, you as a client, you're a person, and your mortgage should fit your need and your goals versus just the rate. Rate is just an end product at the end of the conversation to see, okay, where we fit it. But if your mortgage is not a right fit for you, the rate is really irrelevant because you'll end up paying more money at the end than if you have a wrong product.
I mean, see, that's what like, I have this conversation with so many people who will ask me about rates, and if I ever do, not that I'm a financial expert in real estate law, so I see the tail end of kind of your work. But whenever somebody comes to me and says, you know what, like, who can get me the best rate? My thing is always, you know what, like that's like the worst question to ask because like you can say like the bank, I think it was one of the big banks, was it National Bank or HSBC, that like a couple years ago did 0.99 fixed for like 5 years 4 years, and everybody's like, oh my god, this is an amazing rate. But thing is that if you ever were to break out, how much you have to pay is so much higher. And I've seen, as a law firm, when we're asking for like discharge statements, there's fees to like 30, 50, 60,000. We've seen 80,000. And it's to the point where like 30, 40,000 is not something that's abnormal. I've seen it enough to be like, whoa, this is a lot of money. And it's not because, you know, they are forced to move. Sometimes you have a job, that you find a job somewhere else. Sometimes you have kids. You didn't know you're gonna have kids, and now you have to move. So there's all these other things that are kind of in people's minds. In your perspective, what do you think? This might be a bit of a hot seat question. What do you think?
You know,
What do you think is one of the biggest mistakes a potential client of yours, or anybody looking for a mortgage can make outside of the rate mindset? What kind of mindset would you say is not good? And then to the opposite of it, what way should they be approaching this entire experience of obtaining a mortgage, whether it's to buy or refinance?
it's about thinking that mortgage is just a mortgage. It's a transaction.
Hmm.
It's of your life. Like you're not. How should I explain this? Okay, there is more to your life than just a mortgage. How does that fit in? Like have you? I'm trying to I'm trying to formalize. Like I know in my head, okay, I'm trying to
Yeah.
put it in words correctly. How it works is
It's more like I feel like.
lifestyle, right? Like it's a lifestyle. Like
Yeah.
you're not just, you're just buying a house, okay, to live in a house, okay, like and not have a life. Then yeah, that's, not the best way to go. Some people might just want to, get a house and just pay it off, and that's their goal. But if your goal is to actually have more than just a house with a backyard, and have a life and have, full life, and live it with your family, then
Yeah.
should think of it in those terms. I don't know if
Yeah.
I'm explaining.
No, no, it makes sense, and I kind of sum it up as, like you'll have, especially when the market was going crazy, you have buyers who are fine with going in an offer 100, 200, half a million above asking, but then they want to save $10 a month on their mortgage, which doesn't make sense. So it's like to what you're saying, where it's definitely like it's a lifelong, not it's a lifestyle decision. It's a decision where it's not a transaction. It's whether it's your starter home or a forever home, when you're buying something, or even when you're refinancing, whether it's to consolidate debt, whether whatever it is, you have to look at it in terms of what's the best decision to allow you to build the greatest wealth over your life. It's not just about, I've got the lowest rate. That's great. I'm gonna be like, happy running to the bank, paying this mortgage every month. When in reality, you knew, if you had the right conversations, that you're gonna be out of this house in 3 years because you knew you were going to have kids or something like that. For another 4 years, 5 years, you're going to be out, and you'd have to break that mortgage. So there's all these hard questions that need to be asked, and the cheapest mortgage isn't the cheapest mortgage.
Cheapest mortgage is usually most expensive mortgage at the end.
Hmm.
Majority of people will actually break their mortgage, or switch their mortgage at about 3.5 year
Oh wow.
point. 3.5 years into it. So if you're in a mortgage that has a great rate, okay, like as the one you were talking about, 0.99, and you're trying to get out of it, you're going to have huge penalties. May not be even the best thing to get out. You may not even be able to get out unless you sell the house. There is some of them have a clauses, okay, that it's a sale only that you can break it. So when it comes to going with the cheapest rate and the cheapest mortgage, not something that fits most of the lifestyles, because life happens. Like,
Yeah.
again, that's the beauty of it. Life happens. You need to, be able to live it to the fullest in your beautiful house, okay, like with the best mortgage that you can have.
Yeah, no, and it's also kind of like, you know what, and this is what I say, because sometimes, for example, if you want something that's portable, maybe you have to pay a little bit more, but it's kind of like buying a house that doesn't have a deck but has a big enough back lawn to build that deck. You have that option, right? And so you want that optionality to make sure you preserve your wealth, because it's that whole uh, what is it, penny wise, pound foolish. So you're kind of looking at your pennies, but you're not looking at the bigger picture as to like what's going on in your life. Where do you see things going, and how can you avoid any kind of decision that's going to set you back a certain amount? We actually had people who had clients, without naming names, we had clients who had gotten into these fixed mortgages, and then life happens. They had to sell their house, and now when they sold their house, they had to break out of their mortgage, which got very expensive, more so that they couldn't even cover from the sale proceeds. So now they're running around asking everybody in their family, hey, do you have, like, for some money, because they need to make sure that they can pay everything off so that they don't default on their end of the contract. Because you have to, little do people know that you have to come up with the funds one way or the other to discharge the property completely if you sell your property as the sellers. So it was an expensive mistake, which is, I'm like, well, you should have had the right advisor there to help you, to let you know what you need.
And that's the key, and especially in today's market. Just touching on briefly, like it happens. It has a. I haven't seen it happen yet, but it has a possibility of happening with the values dropping from where they're right now, from where they were, for example, in February. Because what we are saying is, if you bought a house in February
Mm-hmm.
and we send an appraisal, out, the value, February value, and the value today for the same property will have significant difference. And in a market environment like that, if somebody is selling and there is not enough equity, if they were
Mm-hmm.
in an insurance, possibility is that if they sell, okay, they have to sell, they will actually owe more on a house than what they bought for.
Yeah.
So not a bad situation, okay, to be in. Absolutely.
So speaking of the current market, and I've got a question because it's something that I've seen happen, and I'm not sure what the correct solution would be. There's individuals who put in offers in January, February to close July, August. Okay, so the contract was firmed up in January, February, and they're closing in July and August. January, February, as you know, was a hot market, and now it's kind of slowing down. So my question is had they done, would a bank approve a mortgage in January, February, as opposed to would they say no, we're gonna wait closer to the closing date, and then we're going to do all the work, do the appraisal, and then put in finish the paperwork and finalize the mortgage. How does that kind of process work for something like that?
Most of the time, they would go maximum is 120 days. So if the 120 days is over and you haven't closed, they will redo the application. The problem with that is, like, if you bought it in January, your 120 days would have expired, for example, by now. So if the rates that you would have had in January, they wouldn't be able to hold it. So your rate hold would have expired and you would have come to the rates which are right now. So you would have gone from, for example, fixed in January, February would have been like 2%, 2.5%,
Oh.
like 2.5%. My God, okay, 5 year, 2.5%. That's a high rate. Okay, like, can you buy it down? Those were the conversations we were having, right? Like 2.5%, like that is so high. And then today, okay, like, 5 year, you're looking at 5% and upwards of five, like 5.5, 5.6. So it's a long closing, and chances are your rate would have been adjusted to the higher one. The other issue with that one would be appraisal. Again, appraisal, it's about 6 months. So if your bank or whoever was helping you didn't do an appraisal earlier in the year, the value that you'll be getting is the value that is right now, which might be adjusted for the market that is right now. In the city, that may stay the same. Outside of the city, we are seeing a differences
Mm-hmm.
of 50 to 100 in the values of the properties.
Oh wow! And so, how long
Yeah.
is an appraisal good for?
Most of the time, okay, it used to be 6 months, but again, okay, this is the market that we are not used to. Like,
Mm-hmm.
this is something, and the lenders know, okay, that the values have changed. Okay, so it's always, the one who give you the money, okay, they're the ones setting the rules. So if they say, okay, we need a new appraisal, we need a new appraisal.
Have you
So
seen Have you seen that happen with any of your clients where the banks ask for another appraisal? Is that kind of happening?
not for the, because that long of a closing, that's extremely long
Mm-hmm.
closing. Okay, so
Yeah.
nobody does that because they are all trying to buy and sell. Okay, so it's usually shorter. It's usually 3 months, the maximum 4 months. Okay, nobody goes, okay, for 5 or 6. Okay, like lately that I've seen in that situation. And we also tell them, okay, because of the rate, we tell them, like, this is, you're running a risk. Like, this is the rate that you have right now. Okay, this is the rate hold.
Mm-hmm.
If more than that, you will get a best rate that we have, but it will be the best rate at that time.
Oh wow. So then, do you have any tips for buyers in this market who are kind of dealing with, I guess, declining prices or stabilizing prices? What would you say is the best approach for anybody who's thinking of buying their house in the next 3 to 6 months?
We are going into a buyer's market.
Mm-hmm.
Up until maybe 2 or 3 months ago, it was a seller's market. It's no longer a seller's market. It's turning into a buyer's market. So it's is it a good time to buy? Yeah, it's always a good time to buy. You need to live somewhere.
Yeah. Yeah.
You need to start, yeah, start some, like, you can't wait. Okay, the longer you wait, okay, the prices go up, the rates go up. Like, you can't wait. Like, you need to buy, you buy. What you need to do is to sit down with a professional and make sure, okay, that everything is in order, that your down payment is there, that you understand how mortgage works before you go and put that offer. And you should still, in the next 3 months, we will see, predictions are, you know, people who are much smarter than me, okay, are saying that we will see a lot of inventories coming to the market. If you look at the newspapers, it's like doom and gloom over there. It's like just okay, like people are going to be doing that. We don't know. That's the reality. But as if you're thinking of buying, meet with somebody today. Make sure you have all your documents. Make sure your down payment and everything else is there, and start looking, because you will find, and it will be a good time to buy, because you will start building equity. The sooner you get in, the sooner you start building equity in your house.
Yeah.
So what's better than that?
Well, I mean, the funny thing was when we were in the middle of the heated market, and everybody's offering like God knows how much over the asking price. Everybody wanted to jump into the market, right? Because who knows what's going to happen? Everybody's getting into the bidding wars. But now, when you can find those deals, is when everybody's like, okay, no, I don't know. And my thing is always, within real estate, over, I think, what is it, a 7-year gap, you don't really see a decline in real estate. It always does go up overall. And so if you're going to buy, now's the best time ever to buy, because interest rates going up, as weird as that may sound, they're on your side, because they're actually pushing the price down, right? And they can only push it down so much. And then when you grab it, if the interest rates do go down again, which they most likely will, you can pay that down faster, and you can actually experience that bump in the value pretty quickly too, more so than average. Yep.
Absolutely, but also like it comes down to having a right conversation with, you know, your mortgage professional, whoever it is, because there is ways of adjusting your payment. There is ways of, like, even a small prepayment of $20, because the mortgage is amortized over such a long period of time. It makes a difference. So there is ways of building equity. There is ways of, uh, the people think, okay, I just need a payment again. I need to have a huge prepayment, okay, to bring it down. No, like, you need to have those conversations to maximize whatever the payment amounts and whatever prepayments you can do. And yeah, rates go up, rates come down, rates go up, rates come down. We have different products that can, again, on individual basis, everybody needs to, bring their, approval on in a one-on-one basis. But there are products out there that we can actually customize your mortgage. So you don't have to have only a fixed rate. We can customize it, so you can have a portion of it in a fixed. You can have a portion of it in a variable. So it will actually average the rate, okay, for you. Or we can split it in a different portions. So you have your, 1 year, maybe one portion in 1 year, one portion in a 2 year, one portion in a 5. So they're not all coming up at the same time for the renewal, which protects you in the long term. So there is all sorts of things that we can do with mortgages that, will help buyers. But it's you just in and buy. It's like, having kids. Okay, like, are you gonna wait to have kids because they're too expensive? They're always expensive. Let's tell you, they're expensive. Yeah. If you don't have it, like, if you just save money, nobody will ever have kids. Like,
no, but with kids, I you know what I say with kids, and it probably applies to houses as well. They're expensive as you want to make them. So you can, like, get them the best of everything, and then you'll lose a shirt off your back. Or you could live in a more reasonable way, and you can have tons of kids, enjoy everything, and still, be surviving, as opposed to being drowning in debts.
That is perfect analogy, actually, because it does apply to houses as well. You can overbid, okay, like, and do 600,000 over, and then go like, oh my God, great house. What I'm gonna do now, okay? Or you can, buy within your budget and stay within your budget, and be quite happy in your house. Still build, have a great life, build it, pay it off, do whatever you want with it, whatever your goal is.
Yeah, and I think a lot of times the issue has been, people mistaking like their forever home with their starter home. Like when you're first coming in and you see all these Instagram pictures with all this crazy stuff happening, you're like, I need it all, and so my budget has to be like $1 million. Whereas like $1 million is a lot of money, especially for a starter home. That's insane amount of money. So you need to kind of come to a level where you're like, all right, what's a good investment? And again, this goes down to speaking to your professionals, mortgage brokers. Everybody have to be on your side to be like, all right, if this is a starter home and I want to leave and keep it as an investment property, what are my options? And to what you were saying, that's pretty creative. I've never heard that where you could put it in tiers where it's like is that what you said, 1 year term, 2 year term, 5 year term, and different portions? Like, how does that work? Can you just explain a little bit about that, because I haven't heard of that before?
Like, and this is again, okay, like, from my background, because I did investments as well, and mortgage is an investment essentially.
Yeah.
It's not like that's like you people just think of it, it's a mortgage, okay, it's separate from my investment. No, the same principle can apply. So when you do investing, there is dollar cost averaging,
Yeah.
for example, when you just do monthly payment, okay, like, and it builds up.
Yeah.
So with the mortgage, if you are worried that the all rates are going to be astronomical, okay, like in certain amount of time, we can break it down. So we can have like an umbrella product for you, and your mortgage, whatever your mortgage
Mm-hmm.
amount, just gets and gets put in a different terms. That protects you from the interest rate risk, protects you, from all sorts of things,
Yeah.
and you ability. So if you like, a lot of people are especially now, okay, like you see the gloom and doom.
Yeah.
Oh my God, Bank of Canada is going to increase the rates again. Okay, 75 basis points, July 1st. End of the world. It's not end of the world
Yeah.
at all.
Yeah.
It's not. Like, if you're in a variable rate product, it's a great product. The reason you're in that one, because you can actually handle the risk.
Mm-hmm.
So again, rates go up and down. So you had a benefit of a variable up until now. So now it's a little bit of a blimp, but still lower than a fixed rate. And it's going to eventually even out. So if you have a customized product, customized mortgage, we can have a portion in a fixed, so you are not worried, you can sleep well. And we can have a portion in a variable where actually you benefit from a rate going up and down.
Yeah.
And the other thing is that people often think, okay, variable rate and adjustable rate, those are two different products. Variable rate product, you can actually have a payment set to a certain rate, and that payment doesn't change. And then you have adjustable variable, which will actually vary with the prime. So again, you need to have a proper conversation with your mortgage
Yeah,
professional.
and it's safe to say I don't think a lot of professionals can speak to it that way, because as soon as you're telling me, because I studied finance in undergrad too, so whenever you're saying like fixed and variable, to me you're saying it's kind of a mix between bonds and equity, and that's what you've kind of simulated into your house, and you brought it to the average consumer so that they can have they hedge their bets. Because the thing is we were just like earlier this year is when everybody's like, oh my God, doom and gloom, like you're saying, right? And I feel like a lot of it is just to tell everybody to calm down with the bidding wars, and they're kind of screaming at the top of their lungs so that everybody can hear you, and it's not going to be as pronounced as they're kind of making it out to be. But at the same time, if they overshoot with the interest rates and you go to a recession and inflation comes down, they're going to bring the interest rates down too. So if everybody starts locking in, like you can't predict the market. You can't predict the market.
You just have to go in. Like, I don't know if 2008 is perfect example of
Yeah.
this. Okay, when everything just went like poof, okay, like, and the headlines in 2008 were like, oh my God, the crash of the market, like this and that. And at that point, I remember, okay, one of my clients came in, okay, and he goes, okay, is this correct rate on my mortgage statement? Like, he was in a variable rate. I'm like, why? He goes, can you check this? Like, I just want to make sure, okay, like I'm reading this right. I'm like, yeah. He goes, really, this is really correct rate? I'm like, yeah, his rate was actually at that time below 1% because he had a great discount. So when the prime just went down, okay, his
Yeah.
rate just went and it stayed like that, okay, for the longest time. So it was doom and gloom, but it wasn't doom and gloom. Like
Yeah.
if you were properly at the beginning and you understood, you were actually in a quite good place financially, because when is the best time to buy? When things are on
Yeah.
sale,
And you can't.
stock,
Yeah.
everything.
Yeah, and you can't predict the bottom of the market too. So you have to, like, when you see a dip, and this is why I say whenever somebody asks like going to a bank versus a mortgage broker, I always advise to find a good mortgage broker. Reason being that it's not your I'm not coming to your work and telling you how to do your job. So you shouldn't be going and trying to predict where these interest rates are going and going in and saying, "Hey, this is the type of product I need." Right now, a mortgage is no longer just a mortgage. There's so many products out there from so many different lenders with so many different options that even as a real estate lawyer, again, working on that last mile of the entire process, I still do not understand all of it. And I would need to speak to a professional, and I'm smart enough to know that I need a professional when I'm taking out a mortgage. It's just impossible for you to understand every single aspect of it. And not only that, you need. And my thing is I love banks. Our firm works with banks all the time. Ultimately, the mortgage is from a bank, but the reason like mortgage brokers is you can build a relationship with the banks. I don't feel like it's like that anymore. There's a lot of just turnover with mortgage brokers. I can go to the same person and say, hey, starting with my starter home, now I want an investment property. My kid's going to college. I need to take out a credit line. All of these things you need a mortgage broker for, because with a bank, again, I feel like a bank can only sell its own products, and if they have a shoe size 9 and an 11 and you need a 10, they'll give you an 11. It's whatever that'll get on your feet and you can walk, right?
Come on, one size bigger.
Yeah, exactly. Until you try to run and then you're tripping over yourself with the fees. so
It's true, but also as a mortgage broker, it's we work with a team of professionals.
yeah.
Again, okay, like come to us, okay, for the starter home, and if we do our job properly and ask you what your goals are, we'll be able to guide you and come up with a plan. So you're not stuck only in your starter home. As you grow, as your family grows, as your life expands, and you go to different life stages, we can set you up on the right path, okay, that from the
Mm-hmm.
get-go, that you're towards your investment property, towards your cottage and everything else. We do work with accountants, which are a huge part as well, especially when it comes to investment properties and holding companies and stuff. Like it's a team effort.
Yeah.
Like it's like the saying, okay, you need a village to raise a child.
Yeah.
You need professionals to actually make sure, okay, that your finances are actually in full order, and it's important
Yeah.
for us to work, which makes a difference to a client at the end of the day.
Yeah, and to what you're saying, I also feel like it's incredibly important to know the borrower and their risk tolerance, because a lot of times, you know what, I could be the smartest person alive, but if I don't have a really high risk tolerance and I am up all night because I got a variable mortgage, maybe it's just not worth the headache. Even though I disagree with in terms of the monetary perspective, but the psychological perspective, maybe I need to be in a fixed. And so it really depends on that. And somebody needs to really get to know you over time, because you can't figure out in a conversation what a person's personality is and what kind of mortgage products they can ingest. It takes a period of time to get to know you, to understand you, to figure out what that best product is. Speaking of which, just to wrap things up, last question. Given what the Bank of Canada is saying about rate increases, given the doom and gloom, given all of what's going on, are you still suggesting, from a monetary perspective, if you pull out the psychology, just the monetary, are you suggesting variable or fixed?
Variable. What goes down, what goes up comes down always. It's was that okay? Like it's variable. And if you look historically, Bank of Canada has a lot of statistics on their website.
Mm-hmm.
Historically, we will outperform 100%. And again, what goes up comes down. It will come down, and you will get a benefit of that variable rate.
Oh, awesome. Thank you for joining us on the podcast. If anybody wants to reach out to Gabby and learn more about dollar cost averaging your mortgage, which is something that definitely everybody should be thinking about. I've never heard of it before, but now that I have, I definitely something that I'm now going to be telling people, not always, I'll be telling people that they need to be looking at to really understand their mortgage. I'm leaving Gabby's information down below. Check us out, check her out, give her an email, shoot her an email, give her a call, get to know what products she has to offer. Thank you for coming on the podcast, Gabby.
Thank you for having me.